Amazon stock is trading down by over 6%, almost 7% down in the aftermarket hours following the company's release of its financial statements. I'm going to share with you first and foremost one of the things that I feel is causing the share price to decline. And then I'm going to share with you other details that I think all Amazon stock investors need to know. Also, this is important for those of you, and I know many of you, myself included, are now circling around Amazon thinking about adding the shares on this dip here. And so I think you need to know these things before you make your decision on buying or selling Amazon stock. Let me share these details with you here.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so what I have highlighted here, I think is going to be one of the major things that caused Amazon share price to fall. Not this specific line item that I'm showing on screen, but this item here. Amazon's operating profit margin in the AWS segment. And you can see here in the most recent quarter, Amazon's operating profit margin, 32.9%. 32.9%. Now, while this is a healthy operating profit margin, it was the lowest in this category going all the way back. You can see here 1, 2, 3, 4, 5 quarters. This is the lowest operating profit margin the company has generated in this segment. Now, usually, this segment, as revenue increases, the operating profit margin also increases. And this segment has grown to a sizable scale. It's up now $30.9 billion after increasing by 17.5% in the most recent quarter. The growth rate was also relatively disappointing. And I say relatively disappointing because rivals, including Alphabet and Microsoft, already reported results. Microsoft reported results yesterday, and you've probably already seen several of my videos I posted about Microsoft's earnings results. And then Alphabet posted their earnings results late last week. I also did several videos covering Alphabet's earnings results, and they reported much better growth in these categories compared to Amazon. Much better, in the 30% ranges for each of them in their cloud segment. So Amazon growing only 17% after, we already saw the results of Microsoft and Alphabet. Disappointed. It was a letdown because investors were hopeful that Amazon's AWS segment generated an accelerating rate of increase because what we saw already. So that was already a disappointment, the rate of increase in revenue. And then to top it off, to make matters worse, the operating profit margin sequentially fell by 6.5%, down from 39.5% down to 32.9%. And it was also down year over year. If you go back 1, 2, 3, the most recent quarter, the same comparable quarter last year, 35.5% operating profit margin. So this was disappointing to Amazon stock investors, although overall, if you zoom out and look at the figures, it was a fantastic quarter for the business across the board. But the expectations had gotten ahead of themselves here. And so when the actual numbers came out, investors were disappointed. Still, one of the bright spots for the company, overall, the operating profit margin for the trailing 12-month period continues to improve. And this is now several consecutive quarters of improvement. The worldwide operating profit margin as a trailing 12-month percentage of worldwide net sales increased to 11.4%. That's up from 11% in the previous quarter, 10.8% the quarter before that, 9.8% the quarter before that, 9%, and you get the point. 8 to 9 to 9.8 to 10.8 to 11 to 11.4. The company continues to expand its operating profit margin at a massive scale. This isn't a business that's generating a couple of $100 million in revenue. This is a business that's generating over $500 million, close to $700 billion in trailing 12-month revenue, right? 670 billion to be precise, trailing 12-month net sales. So it's a massive scale, and it's increasing operating profit margin on that magnitude. And that's truly impressive. In fact, if we go back, 2019, I didn't think Amazon would be able to achieve these kinds of results. And the new CEO, I shouldn't say new, it's been a few years now, but I'm always going to think of Andy Jassy as the new CEO because Jeff Bezos is the original CEO of Amazon. And I remember when Jeff Bezos was stepping away on the day-to-day operations role and, handing it over to Andy Jassy, there was a lot of concern from investors, including myself, of Andy Jassy's ability to match or even approach what Jeff Bezos had achieved. And I think most investors would agree. I know I would agree that Andy Jassy has done an excellent job as CEO of Amazon. The performance in this very difficult time has been excellent. The degree of difficulty, right? When you're watching the Olympics, the degree of difficulty matters, right? On the score, the judges look at the degree of difficulty and the execution on that degree of difficulty. And what Amazon had to go through in the previous 5 years, going into the pandemic and coming out of the pandemic, the degree of difficulty has been like max level, right? Unprecedented circumstances. And now, as you're going into another high degree of difficulty category with the tariffs now increasing on the United States trading partners, I think investors can be more confident in Amazon's ability to manage this situation because of how well Amazon managed the pandemic, going into and coming out of the pandemic. And many companies did one side of that equation well, either going into the pandemic, the lockdown stage, they did really well. But then coming out of the pandemic, the economic reopening, they fumbled. Or the other way around, they fumbled the lockdown stage, but then they executed well during the economic reopening, right? There's a lot of companies that did, one side well. But very few companies, I can count, on maybe two hands, the amount of companies that handled both sides of that equation excellently. Amazon was one of them. In more positive news, the advertising services segment increased, accelerated the rate of increase now for 2 consecutive quarters. Revenue in this segment increased by 22% to 15.7 billion. Remember, this is a high margin business segment. So as the advertising services segment grows, you can see why the operating profit margin has been able to increase is because Amazon's higher profit margin business segments are growing faster than the business overall. Subscription services also increased by 11%, another high margin business segment. I was also impressed by Amazon's ability to handle an increase in unit sales, meaning more things were purchased on Amazon's website, and it was able to do this with fewer employees. You can see here Amazon's employees, full-time and part-time, reduced to 1.546 million. That was down from 1.56 million in the prior quarter. So it had 14,000 fewer employees and it managed significantly more units. Worldwide paid units growth increased by 12% year over year in the most recent quarter. And so it was shipping more units, and it was able to do that with fewer employees. And I was impressed with that. Of course, I've been reporting on automation and robotics inside warehouses. Amazon's been a leader in this category. In fact, you may like one of the companies I've recommended as a buy in this space, Symbotic, which works very closely with Walmart actually, and I've had that stock recommended as a buy for some time now, and that's what they do. They automate warehouse operations with robotics and artificial intelligence, helping companies like Walmart and Amazon improve operations with fewer employees, get more done with fewer people using automation and robotics. Amazon, there's been a lot of reporting suggesting that Amazon is leading this category in improving its performance, improving efficiency, and I was impressed with this as well. So when I go to fiscal.ai, which is my preferred data source for charts like these, which is Amazon's forward price to earnings ratio, there's a link in the description for fiscal.ai. You'll get a discount if you use my link. Amazon's trading at a forward PE of 36.6. And I wouldn't be surprised tomorrow morning if this valuation is lower, if it's trading at a forward PE of around 33, maybe a little bit lower than that, depending on the price action tomorrow morning. I think this is an attractive opportunity. So I reiterated my buy rating for Amazon stock. I have it rated as one of the best 9 stocks to buy. And I'm considering adding Amazon stock to my portfolio. I'm going to have a lot more videos coming out about Amazon over the next few days. I'm going to keep a closer watch, see where the price moves, see more details about what management had to say about the recently completed quarter, but more importantly, looking ahead, the impacts of tariffs, how they're handling it, all of those things, and considering purchasing Amazon stock maybe as soon as next week if the price remains around where it is here or lower. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.